And gentlemen, I hope you're having a wonderful morning. It is April 7th, 2025, and you have a historic weekend day ahead of you. Now, I will tell you, starting off the morning, it is not as bad as last night. We went live. We had the watch list. Futures opened up down 5%. We are 30 minutes out from the bell right now, and 30 minutes out from the bell right down about 2%. I say only because over the last 2 days, we have sold off over 10%, but last night it was looking wicked pretty much over the weekend. Donald Trump, the administration, Lutnick, Besant, they all doubled and tripled down on their rhetoric. They did not walk anything back. We did hear a little bit this morning. Von der Leyen said they're going to respond, and we heard a couple of other things, but generally this idea of not walking back the fear, that was there, and now people are talking about the Fed and rate cuts. Again, the VIX, the volatility, that's it. You will hear there's like a closed-door meeting for the Fed. That is not a big deal. So make no mistake, that's not what I'm talking about. But the odds of a rate cut before March have now gone up to about 40%. Before the April meeting. So we'll see where that all plays out, but I don't know if it's Black Monday or not. It's looking a lot better than last night, but anything could happen, and we'll see. Japan Ishiba says conducted a phone call with Trump, told Trump that tariffs would cut Japan investment capacity. Was that him threatening the bonds? But either way, we're going to have a wild one, Chatadonia. I hope you're ready for it. Welcome to April. Historic volatility. And then we also have earnings, too. Airlines and then Bank of America and JP Morgan. But Chatadonia, how you feeling for Monday, baby? Good morning. What up, Anzel? Young Sweet, Zach, Ben Stone, Alexander, Jesse Days, PSC, baby. What's going on? Open Face Sandwich, Dia, Haman, Mark, baby, Chris Saye, Brady, Game, Caleb Wilson, Christina, Sean, Nicole, baby. What's going on? Jamal, Dystopian, Laker, Jay. Good morning, baby. What up, Ivan? What up, Ben? Dakota, Jennifer, Patrick, Matt, Arch Diesel, Brown, Tom Crows, Coyotes, baby, JJ, what's going on? Dewey, Xavier, Andreas, JG, Mr. Deco, baby, what's going on? Benny Silverio, Gunnar, Greg, Kurt McGirt, baby, good morning. Lucky Soldier, Joe Williams, Thomas, Aaron, Stock Watchers, baby, what up? What up, Tyreen? What up, Connor? What up, Derek? Good morning. What about that Twitch? Mother Liquor, Samrat, El Coyote, Roach Vince 12, Jim and Blowendo, PhD, Stock Sasquatch, Senor, Linsense, Relentless, Infrared, Blazing Bob, Blizzy B, Roach again, Robo Hand Tech Pie Guy, and Epic Eric, baby. Good morning. So, Chatadonia, get ready. Get ready. It's going to be a wild one all week. Again, we have CPI, and then you have consumer sentiment, the market's favorite set of data. So, yeah, we'll see. But, Chatadonia, God bless America. Shout out to the vets, too, baby. Here is Josh AI with the news. Run it. Stocks trim sell-off as bets on Fed rate cuts grow. A stock-selling stampede abated as traders boosted expectations for Federal Reserve rate cuts amid economic fears just days ahead of President Donald Trump's deadline for reciprocal tariffs to take effect. Futures on the S&P 500 lost about 2.5% on Monday, trimming an earlier slide of about 5.5%. A $9.5 trillion wipeout in global equity value put the U.S. equity benchmark on the brink of a bear market. Investors have dumped risk and snapped up bonds, with two-year yields tumbling as much as 22 basis points before pairing the move. Markets priced 125 basis points of easing by year-end, equivalent to 5 quarter-point cuts. The repricing reflects the fear sweeping global markets, with Trump showing little appetite to back down on aggressive trade tariffs. Wall Street billionaires Bill Ackman and Stanley Druckenmiller slammed Trump's decision to launch expansive global tariffs, and JP Morgan Chase and company chief executive officer Jamie Dimon urged a quick resolution. The magnitude of moves across equities, rates, and many commodities is resulting in hedge funds being hit with some of their largest margin calls since the COVID pandemic. The good news is that this forced de-risking may be near completion, which could offer U.S. stocks the chance for a rebound in the American session when cash trading gets going. Are we there yet? Said Jonathan Krinsky at BTIG. Many metrics are at panic levels associated with meaningful bottoms over the past 40 years. The issue is when you get into the capitulation zone, markets often move beyond what many think is likely or possible. HSBC strategist Max Kettner is making the case for a very short-term bounce in stock markets, with the Magnificent Seven possibly benefiting the most. However, any rebound will only set the stage for another leg lower. He warns to Morgan Stanley's Michael Wilson, investors should be prepared for the S&P 500 to drop further if tariff angst doesn't subside. Based on the technical evidence, our breadth and sentiment indicators have reached bearish extremes associated with prior bear market lows, said Craig Johnson at Piper Sandler. Don't stop believing in stocks as they test long-term support levels. Among the measures Johnson monitors are market breadth, which in his view is showing signs of being washed out. He also cited the fact that sentiment gauges are at bearish extremes. Wall Street's gauge of equity volatility, the VX, briefly surpassed 60 on Monday before pairing its surge. Its futures curve has become extremely inverted, reflecting heightened near-term stress and a flight to hedging in shorter-term contracts. The spread in generic first versus 8-month futures has reached levels last seen during the worst of COVID days in 2020. The slump has taken U.S. equity valuations to the lowest level since late 2023. The retail crowd is the last group of investors that has yet to sell U.S. equities, presenting an additional risk to the stock market. According to Goldman Sachs Group Inc.'s trading desk, its data shows hedge funds have already de-risked while long-only funds were heavy sellers of U.S. equities at the end of last week and are likely to continue selling given their low levels of cash allocation. The focus now turns to the biggest holder of the asset class, U.S. households, who have not yet shed risk, the desk writes, adding that foreign investors are also sitting on a large pile of accumulated exposure in U.S. equities. The swift and sudden stock market decline is a repricing to reflect an impending recession from the burden of tariffs, said Richard Saperstein at Treasury Partners. Markets won't rebound until tariffs are negotiated and reduced, until valuations move even lower to very compelling levels, and until fundamentals improve, and none of these factors are in the cards at this time. Wall Street forecasters are racing to temper their views on U.S. equities as Trump's sweeping tariffs threaten to upend the global economy. Oppenheimer and Comer's John Stoltzfus, the biggest bull among strategists until March, became the latest to slash his year-end target on the S&P 500 index to 5,950 points from 7,100. Strategists at Evercore ISI, Goldman Sachs Group Inc., and Societe Generale SA have also reduced targets in recent days. In a note to clients Monday, Stoltzfus said uncertainty was at levels investors find hard to embrace. This is being combined with a negative pitch book that seemingly projects negative outcomes to infinity. Trump rejects market rout fears, shows defiance on tariffs. President Donald Trump and his economic team dismissed investors' fears of inflation and recession, offering no apologies for the market turmoil sparked by sweeping global tariffs and defiantly insisting a boom is on the horizon. Trump, speaking Sunday on Air Force One, struck a determined tone and repeatedly defended the tariff barrage unveiled last week. He also drew something of a line in the sand, saying he wouldn't strike deals to cut the highest tariff tariffs. Unless they eliminate the U.S. trade deficit with that country, we're going to become a wealthy nation again, wealthy like never before, Trump told reporters Sunday. We have all the advantages. Forget markets for a second. We have all the advantages. I don't want anything to go down, but sometimes you have to take medicine to fix something, Trump said as U.S. equity futures slumped and the yen surged in a sign of deepening turmoil from the tariffs. China discusses accelerating stimulus to counter Trump tariffs. China's policymakers discussed measures over the weekend to stabilize the economy and the markets in the face of U.S. President Donald Trump's tariff onslaught, including whether to accelerate plans to unleash stimulus to bolster consumption, according to people familiar with the matter. Top leadership and senior officials across government entities, including the financial regulators, convened in the last 3 days and considered moving forward some measures that were planned even before Trump's tariffs, said the people asking not to be identified, discussing a private matter. And traders add to bets on 2025. Fed cuts with risk of emergency move. Traders boosted expectations for the Federal Reserve to cut interest rates this year and raise the specter of a reduction before the central bank's next meeting. As the U.S. administration's tariffs ignite fears of a global recession, markets briefly priced in 125 basis points of easing by year-end, equivalent to 5 quarter-point moves. Overnight interest rate swaps showed, while traders later pared that move back. The uptick has been sharp as of last week. Just 3 reductions were fully priced. Swaps also show a chance of almost 40% that the central bank lowers its benchmark rate 25 basis points by next week, well before the Fed's next scheduled policy decision on May 7. The rapid repricing reflects the fear sweeping global markets, with U.S. President Donald Trump showing little appetite to back down on aggressive trade tariffs announced last week. He told reporters on Sunday evening to forget markets for a second. Top overnight news: the carnage in financial markets unleashed by President Donald Trump's tariffs is continuing unabated as equities get pummeled and U.S. stock futures show that last week's $5 trillion wipeout isn't over. China's policymakers discussed measures over the weekend to stabilize the economy and the markets in the face of U.S. President Donald Trump's tariff onslaught, including whether to accelerate plans to unleash stimulus to bolster consumption, according to people familiar with the matter. Japan's nominal wages rose more than expected in a positive sign for the domestic economy, just as external headwinds related to trade are clouding the outlook. Shell-shocked investors are piling into U.S. Treasuries on concern that Donald Trump's trade war will trigger a worldwide recession, ignoring, for now at least, the risk that the same punitive tariffs may unleash another bout of inflation. Bill Ackman and Stanley Druckenmiller slammed President Donald Trump's decision to launch expansive global tariffs, which have plunged markets into chaos. BBG. No BBG. No BB, just TLT lows, just TLT lows in the midst of panic. Beautiful. Beautiful. We have more. There's more, baby. S&P futures, they're down by 2.6 on Monday morning trading. NASDAQ down 2.8. VIX above 45 comes after U.S. equities sold off sharply last week, with the S&P down over 9% and the NASDAQ off over 10%. S&P saw the worst two-day performance last Thursday and Friday since March of 2020. Index down 17% since February high. Treasuries mostly stronger with the curve bull steepening. Dollar index little change. Gold is up by 0.4. Bitcoin off by 4.2 and WTI down by 2.6. Global risk off has spilled over from last week as comments from Trump and his admin over the weekend show no meaningful interest in backing down on tariff policy. Such pushback has seemingly overshadowed headlines about several countries interested in negotiating on tariffs. Combination of market sell-off and growth risk from tariff has triggered a ramp in recession odds, which complicates the historical equity market recovery math. Positioning still big year-to-date inflows to U.S. equities, valuation and policy sequencing overhang. In addition, market is pricing in as much as 125 basis points of Fed easing this year at one point today. Central bank commentary, including from Powell late last week, has harped on the patience mantra amid resilient hard data and sticky inflation. Nothing on the calendar today. Fed Governor Kugler speaks on inflation and the Phillips curve at 10:30. Tuesday brings non-farm or NFIB small business sentiment for March. In addition, San Francisco Fed Dolly outlook on Wednesday as well, or Tuesday. Wholesale inventories out on Wednesday morning. Richmond Fed Barkin on Wednesday at 11, while March FOMC minutes are out at 2. CPI the highlight on Thursday, along with initial claims. Street looking for core CPI up 0.3 month over month in March, with the year-over-year rate falling to 3.0 from 3.1. Busy day of Fed speak with Logan, Schmid, Goolsby, and Harker all scheduled, along with Bowman confirmation hearing for Vice Chair of Supervision. March PPI and preliminary University of Michigan sentiment out on Friday. Musalim and Williams are speakers that morning. Meta released Llama 4 AI models amid heightened competition from Chinese offering. New York Times discussed the boom in Tesla used vehicle market. CPRI reportedly could reach deal to sell Versace to Prada as soon as Thursday, though price may be a third lower than original of the $1 billion. Starbucks slowing expansion in India. WBD in the headlines on the back of a strong opening weekend for Minecraft movie. QGen guided above for Q1 and raised full-year outlook. Financial Times mentioned APO, BX, CG, and KKR in a report about institutional investors looking to exit stakes in PE funds. Hot dog. There's more. Trump unbowed on tariffs. White House officials vow to stay course. Tariffs raise bar for Fed rate cuts by stoking even higher inflation, slower growth than expected. Wall Street starts to speak out against tariffs. Bill Ackman calls for a 90-day pause on tariffs to prevent economic fallout. Chinese policymakers discuss stimulus amid tariff fallout, calls for calm. China struggles to engage with Trump team. Beijing arms itself for another trade war. Trump says Beijing objections to tariffs stalled TikTok deal. Apple keeps TikTok on U.S. App Store. Staggering $1.9 trillion in extra industrial lending fueled for a continued flood of China exports that are heading for the world. China tightens control on exports of rare earth, threatening to disrupt global supply as trade war with U.S. escalates. U.S. Customs begins collecting 10% tariff on imports, with higher rates starting soon. U.S. companies are uncertain about responding to Trump tariffs due to potential backlash. Trump admin considering financial aid for farmers affected by tariffs. EU unites behind 28 billion counter tariffs on U.S. goods as trade war escalates. France opposes big tech data regulation as retaliation against Trump tariffs. Vietnam offers to remove tariffs on all U.S. imports, asks for 45-day reprieve from Trump levies. Free trade benefits first. Many countries could see world find a way to live without the U.S. Global stocks plunge on Monday. U.S. futures down sharply as White House offers no respite from tariffs. In a matter of days, market outlook shifts from solid growth to recession risk, leaving the street reeling. Wall Street forecasters cut year-end targets for S&P on tariff hit. JP Morgan notes that volatility-targeted portfolios may sell $25 to $35 billion in equities to reduce risk. Money market funds seeing increased investment as retail investors shy away from buying dips. Panic selling hits China stocks. Goldman Sachs cuts 25 growth forecast for China. China government bond surge pushing benchmark yield towards a record low on trade war fears. Large institutional investors evaluating options to discard stakes in illiquid. Private equity funds following market route. Stronger yen. Macro hedge funds spelled trouble for Japan stocks. Rising speculation on Chinese yuan devaluation following pledge of resolute response to tariffs. Demand for U.S. dollar funding increases due to risk aversion in global financial markets. Yen and Swiss franc among currencies rallying as traders seek safe haven. Crude oil now costs 15% less than it did before Trump announced plans to impose stiff new tariffs. Tariff increase urgency GOP tax cut package, but threaten to undermine boost to business and consumer confidence. Shoppers rush to buy ahead of expected price hikes following tariff announcement. Economists warn tariffs may fuel inflation, risking wage stagnation and lower incomes for May. Goldman raises U.S. recession probability to 45% from 35%, cuts 2025 GDP forecast. Michigan first victim of Trump tariffs where companies and workers are already feeling the hit. Japan real wages sink for the second consecutive month as inflation digs in. German industrial output down by 1.3 in February, driven mainly by construction, food, and energy. German public sector secures 5.8 staggering wage hike after arbitration resolves union-employer deadlock. Senate approves budget blueprint for Trump tax cuts and border agenda. House GOP leaders push to revise Senate budget through the House this week despite potential opposition. Senate Republicans hoping to ice Democrats out from deciding the fate of 2017 tax cuts. Bank of Japan economic assessment steady for all 9 regions. Some firms worried about U.S. tariff impact. ECB Schnabel warns of rising uncertainty as Trump tariffs threaten Eurozone economy. ECB warns Trump tariff risk of Eurozone demand shock as rate decision looms. Ukrainian team will visit U.S. this week. Poll finds Republican and Democrat division becomes a chasm on foreign policy for voters. European demands coordinated pullout and roadmap to prevent Russian exploitation of defense gaps. Tesla stock drops below 214, a price Commerce Secretary Lutnick said it would never fall to again. Used Tesla market is booming. Reports say Microsoft venture Wickersoft to halt China operations. Concerns grow in Washington over Trump relations with Meta CEO, potentially affecting major FTC case. Sneaker supply chain, a big pain point in Trump's tariff war hitting Vietnam. How Met Aerospace may halt shipments due to tariffs. Foxconn reported Q1 revenue driven by AI demand, and Shell reduced its gas production estimate for Q1 due to unplanned maintenance. Wow, so many a headline. There is a more. Honestly, just a bunch of pre-market movers, but really nothing's up. It's all algo stocks that are down. So again, there's a couple names up. Tiva's up 4.5. They have FDA data. XL is up 1.0. Kenvue up 0.9. Nothing. Rhythm is up by 6.5. Pivotal phase 3. Transcend trial. Goggle up 3.4. QGen up 2.7 off guidance. VTRS up 2.7. National settlement framework to resolve opiate claims. Mesa up 37 to combine Republic Airways. LXEO up 15.2. Phase 1, phase 2 data. Gilt is up 4.2. 23 million multi-year contract. Trading lower. Everything. Tesla's down 7. Wedbush decrease. Reddit down 6.4. Truist initiates buy. HWM down 5. Reportedly declares force majeure. All these names down. Caterpillar down 5. UBS downgrade. GM down 5. Bernstein downgrade. UAL down 4.9. UBS downgrade. Pinterest down 4.8. Raymond James downgrade. FMCC down 10. Oklo down 9. DJT down 7. HIMS down 7. Joby down 7. GSAT down 6. Zim down 6, new long-term chartering agreement. TGTX down 6, 2 publications highlighting medical journals. Coherus down 5.2, Northern upgrade. SMTC is up down by 4.8, initiates equal weight at Morgan Stanley. Court down 4.6, phase 2 trial. Lyft down 4.6 for no reason. TNXP down on data. Riley down 5.4, complete sale of W2 wealth management business. Bitcoin-related stocks trading lower. Chinese ADRs lower, and European ADRs trading lower. Yeah, man, usually these pre-market movers, there's some headlines, but everything just triggers the 5% drop. Ta-da! But, Chadadonia, game time. I hope you guys are ready. I hope you're feeling good. Honestly, this is way chiller than last night. Again, TLT, I mean, it kind of makes sense, but not really. I still think there's an opportunity there, but literally yesterday, TLT was up 0.5% when we were down 5%. Now we're only down 2%, and it's negative, but people are saying that bonds, this is until pretty much Powell reacts, they're kind of doubting the bonds, but I do believe that's the opportunity. But that being said, ladies and gentlemen, boys and girls, I hope you are feeling good. I hope you are feeling blessed. And here at the Cult, before we do anything, before we try to chase a dollar, before we try to enrich ourselves, we must pay homage to a very special group of people that has made a sacrifice that most of us never have and never will. And I'm talking about the veterans of the United States of America. So on behalf of the Cult, the people here, the people not here, want to give a huge special shout out, active servicemen, past servicemen, anybody who has served this country, even the families. Thank you for everything. The market and everyone saying, oh, it's all going crazy. Oh, trade. What's going to happen here? What would happen if we didn't have our freedom? What would happen if you didn't have millions of honorable men and women who came before us and served for people they've never met? So it's awesome that we get to wake up every day and be on the stock market, but if we didn't have people who made that sacrifice ahead of us, I don't think we would be doing this right now. So I hope you never forget that and show this honor and respect to the veterans, man. And if you haven't served, I hope you bring this love and appreciation to real life, because this is the least that we can do. And if anybody should be getting a long-term in a crib, veterans, let's go, baby. And thank you for everything. Big shout-outs to your families as well. And big shout-outs to anybody else out there giving back to their local communities. All the doctors, nurses, teachers, firefighters, police officers, the janitors, the coaches, the garbage men, anybody making their community run. God bless you and thank you, baby. But, ladies and gentlemen, please rise up. Place your right hand over your heart. Say it with me. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all, baby. Citizens! Oh, it's game time, baby. Horn. Let's go. Oh, Chadadonia. Are you guys ready or what? That's it. You got 5 minutes. We already went over the place. We went over everything. That's it. All you have is either you get a bounce or TLT. It's one or the other. That's it. That's good luck. We're going to have a crazy week, baby. Oh, Burley Frizzle on the beach! Oh, shout out the vets and shout out the Peach. That's how we're ending this? That's how we're going to end it before we go to Gen Pop? Really? Oh, dang, that's crazy. Good morning, baby. Good morning. So, Chadadonia, that's what I'm fucking talking about. Let's have a good one. It's going to be wild. So here's the link. I will see you all at Gen Pop. Be safe out there. Let's have a good one. And welcome to history. And still, even in decline, baby. Shout out to Long Term. Oh, they don't feel me. They don't feel me. I'll see you guys in a little bit. God bless America. And peace.